Hello everyone and welcome to the Quantpedia Explains Trading Strategies video series. Today, we will discuss top 10 trading blogs on Quantpedia in 2024.
Hello everyone, my name is Radovan Vojtko, I'm CEO at Quantpedia. So today we will have a special video and special topic. We will review the top 10 blog posts on Quantpedia in 2024. The reason for that is because it's January, start of the year 2025, and we can review the last year and maybe you will find some ideas that you can implement in year 2025, or that you can use and change your current trading strategies, etc. etc. So let's go straight to our topic. Number 10, based on Google Analytics ranking in year 2024, was the pre-holiday effect in commodities. So what was the blog about? We discussed how the commodities and especially the gasoline performs before the public holidays, and we found very interesting trading strategy, in a crude oil, but even better in gasoline. So there is a significant drift in the prices before the US holidays because the people like to drive to see their families, etc., etc., and they use the gasoline, of course. So this makes a drift in the prices of gasoline, and we can profit out of that. Number 9, how to profitably trade Bitcoin overnight sessions. Once again, in 2024, we reviewed how you can split the trading in Bitcoin in intraday and overnight session. Intraday session is when the New York Stock Exchange market is open, so when the professionals are in the work, and the overnight sessions are sessions when people are out of the work, so it's during the weekend or during the night. So we split Bitcoin trading into those two sessions, and we realized that in the Bitcoin there is some significant drift in overnight sessions, the same drift as in equities. So in equities you have a drift during the overnight sessions, and in the Bitcoin you have also drift during the overnight session. The most of the performance is during that overnight session, and you can gain more money if you trade just the overnight session, and the whole article is about that. The number 8, how to improve ETF sector momentum. So the alpha of sector momentum strategies has diminished over the time, and we try to introduce enhanced approach to sector momentum. What we did is that we replicated the sector momentum strategy using 9 sector ETFs, and we try to improve this strategy because strategy itself, using just the momentum on sector ETFs doesn't work as well as worked in 2005, 6, 7, etc., like 15 years ago. So what we tried is we implemented selective shorting. Using this selective shorting, we were able to outperform the benchmark, outperform the S&P 500, and improve the performance of sector momentum strategies. So if you are interested, take a look on this article. Number 7, how to improve commodity momentum using intra-market correlations. Once again, the commodity momentum doesn't work as worked in 10 years ago or 15 years ago. So what we did is that we introduced the new correlation filter. So we compared the short-term and long-term correlation between the individual commodity sectors. So our trading strategy uses not individual commodities but commodity sectors like agriculture, base metals, energy, and precious metals. And we calculate the 20-day correlation between those sectors and 250-day correlation between those sectors, and then we trade momentum or reversal strategy based on that correlation. So if short-term correlation is higher than the long-term correlation, we trade momentum strategy, and if the short-term correlation is lower than long-term correlation, we trade the reversal strategy. Improved strategy has interesting performance, outperforms all of the benchmarks, and is very nice addition to diversified portfolio. That's how to trade or how to improve the commodity momentum. Okay, then number 6, combining discretionary and algorithmic trading. So this is not the blog post or article written by Quantpedia. That's a review of the paper written by Zaratini and Stamautodis in 2024. It's a very interesting paper. It shows that you may be discretionary trader and you may use systematic trading strategies, and just based on your experience you can significantly improve that systematic or quant strategies by using your experience as a discretionary trader. So if you are a discretionary trader, or if you are quant trader and you have a discretionary trader close to you, I really recommend you to read this article. It will show you how you can combine knowledge of the discretionary traders and quants into one package, and how to make more money. Number 5, designing robust trend following system. Once again, this is not our article, it's a review of the paper written by Dobromir Tsotchev, and it's a very nice framework how to build robust, diversified, multi-asset trend following system using the futures. So if you are trading diversified futures, I really recommend you to review this paper. You may know a lot of the tricks that are in the paper, but maybe some of those tricks that are new in the paper can be implemented in your fund or in your trading strategies. So I really recommend you to read this paper. It's number 5 over the year 2024 in the popularity on Quantpedia. Number 4, how to build mean reversion strategies in currencies. So currency trading is very popular popular style, very popular strategies, and our article explores simple mean reversion trading strategy applied to FX futures, and we are focusing on identifying undervalued and overvalued currencies to generate returns. This article is like a strategy how to build a simple mean reversion trading strategy, so how mean reversion works in currencies. I mean, what is the main takeaway is that you are not able to profit in the currency markets if you do not use leverage, and you must use leverage very selectively. Yeah, it can make a problem for you when there are strong movements on the currency market, but when you do it smart, you use exponential weighting of the leverage, which is our idea, and you can find profit in the mean reverting currency markets, because currency markets are usually mean reverting, and you can profit out of this mean reversion. So that's number 4. We are going to the top 3. So what's the place number 3? Place number 3, we have how much Bitcoin should we allocate to the portfolio. That's a portfolio allocation article. We can examine Bitcoin's whole history, and we can have an impression that Bitcoin is a new super asset, but it's good to have realistic expectations. What should be the role of the Bitcoin in diversified portfolio that consists of bonds, commodities, real estate, equities, etc., etc. How many percent should I place into the Bitcoin as an asset class? So we ran an analysis. The analysis was built on the idea that we can split the whole history of the Bitcoin into in sample and out of sample, or pre-financialization and after the financialization. What does it mean? So before approximately 2019, the Bitcoin was alternative asset, very hard to buy, significant barriers for funds to invest, etc., etc. But this situation has changed in approximately 2019, when a lot of the instruments that are used in the funds were introduced, like Bitcoin futures, later Bitcoin ETFs, etc., etc. And right now, the Bitcoin is or cryptocurrencies itself, they are the main asset class. What does it mean is that we cannot use the whole history and draw conclusions out of that. What is like the best analogy is the commodity market. The commodity market was in the same situation in 2000 or between 2000 and 2010. So it was very good diversifier in 2005, 4, 3, 2, etc., etc. But once the professional instruments like commodity ETFs were introduced, so more and more funds started to use the commodities, the price action in the market changed at all, and it's not such a good diversifier as it was 40 years ago. And the same is for the Bitcoin. So yeah, of course you can use the cryptocurrencies and you can diversify with the cryptocurrencies, but based on the Markowitz model, based on all of the different models, you cannot expect same performance as it was in the past from the Bitcoin. So it makes sense to have like 2 to 5% of the cryptocurrencies in your portfolio. When you have more than 2 or 5% of the cryptocurrencies in your overall portfolio, you have like excessively high risk. So that's our takeaway. You may agree, you may not agree with the article, but it's one of the most popular articles in 2024 on our blog. Number 2, the pragmatic asset allocation model for semi-active investors, and few thoughts on the pragmatic asset allocation. So those are 2 introductory articles about our semi-active asset allocation framework that uses trend and yield curve signals together with the crisis hedge investment portfolio. So that's our framework, that's our article, and it will show you how to build the coherent framework for asset allocation that's not very active, so it's not trading actively on a weekly basis or daily basis or monthly basis, but it trades 1 in a quarter. So it's like something between active and passive funds, and it will show you how to build diversified portfolio with the trend protection, with the hedging investment universe, etc., etc., with the tranching. So the whole framework how you can build your investment portfolio, which is not very active, but on the other hand should have a less risk than just buying and holding some ETF. It's a little longer article, but I really recommend you to go through it, and then you can read also the second article which builds on this first one. What was the most popular blog post in 2024? It's exploration of CTA momentum strategies using ETFs. So in this article we analyzed the CTA proxy strategy. So CTA are kind of the funds that trade futures, but instead of futures we use the ETFs. So we used ETFs across all asset classes. We built the strategy that's in nature very similar to how the managed futures strategies are built or CTA strategies are built, but we used ETFs and we suggested how to improve the risk return profile of such strategy. And you can build that strategy yourself with ETFs, or when when you are a managed future fund, you can use the findings and you can improve your strategy. When you are using the futures. What was the main idea? The main idea was that we can easily replicate CTA index using ETFs. We do not need the futures, so we can build long, short portfolios because the offering in ETF market is really broad. What is the main advantage? What we can do or how we can improve managed future strategies is that we suggest to remove the short leg on equity sub universe. So we recommend not to short US equities. When you short US equities, you have like more negative correlation to the overall market. Maybe your strategy is less correlated to US stocks, but on the other hand, you pay a lot by shorting the stocks. There is very strong positive drift in the US stocks. When you short them, that's probably the leg or the universe that most negatively contributes to your performance as a CTA fund. What we recommend is to remove this short leg, so do not short equities at all. You can short commodities, you can short FX, and you can go long stocks, you can go long commodities, you can go long bonds and FX, but do not short the equities. When you short equities, you pay a lot for that short leg, and it will not help you so much with the correlation. Even if you remove the short leg from the equities, you will still have low correlation to the overall equity market. Your performance will be better, your Sharpe ratio will be better, risk return ratios will be better. So it doesn't make sense to short equities in our opinion in this kind of strategies. When we remove the short leg, we have better performance, better Sharpe ratio, better counter ratio. We can leverage ETFs, we can have a nice strategy out of that. So that's our year 2024. I hope that you liked the current video. Those are the top 10 blog posts on Quantpedia in 2024. I hope that you find some inspiration for your trading, inspiration for your research. Please stay with us in year 2025. If you like this video, give us the like, subscribe to our channel. I hope that you will join me in the next videos in year 2025 and have a nice trading. Thank you.
Are you interested? Then pick another video to learn more, or subscribe to Quantpedia Pro and try how our analytics and reporting significantly save time spent on quantitative research.